Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs. We are counting you down to the closing bell. Here to help take us beyond the bell, it's our global simulcast. Carol Massar joining us right now, bringing together our Bloomberg Television, radio, and YouTube audiences. And Carol, obviously, we keep an eye on what's going on in the market. That is obviously what we do here. Obviously, a day that carries a lot more implications, I guess, for how we feel about the U.S. and U.S. policy, but nevertheless, we do our jobs and move on.
No, absolutely. Yeah. Financial markets, what's going on in the world of business, front and center. But, you know, those comments from President Biden, somber. And just a reminder that at any moment, the wall of worry that might be on investors' minds, whether it's geopolitical events or something within the financial markets or regulatory moves or news out of China, these are things that can certainly impact, Caroline, investor sentiment. We see it playing out, and some days investors shrug it off, some days they don't.
Investor sentiment muted today, of course. We end flat on after a month of, once again, 7 months of straight gains here for August on the S&P 500. But it was interesting on a day where consumer sentiment, Taylor, has been dwindling, certainly because of Delta front and center.
Yeah, we had some really interesting comments, I believe, at the bottom of the 2 o'clock hour on some of those consumer sentiment numbers. And Carol, what was interesting is it did feel like some of the concerns about Delta and the virus, and then, of course, it also felt like concerns about rising prices and some of the inflationary trends that are underway. And is that the right reaction function, Romaine, that when inflation feels a little bit too high, consumers fall back, and then inflation falls back, or does it?
Well, it'll be interesting, too, because when we had that whole debate about transitory or not, a lot of it was tied to what we were seeing in the commodity space. We actually saw commodities come down pretty significantly here during the last month here. You're looking at right now the daily numbers here for the major indices for our radio audiences. It's the Dow Jones Industrial Average, down about 40 points here on the day, 0.1%. It's still going to finish the month higher here by about 1%. The S&P 500 down 6 points, or about 0.1%, but once again higher on a month-to-date basis by about 2.9%. The Nasdaq Composite 15,259. That's down about 6-7 points here on the day. The Nasdaq going to finish the month higher by about 4% here, and the Russell 2000 actually bucking the trend here on the day. Actually higher here on the day, up by 0.3%, and on a monthly basis, Carol, it's up 2%.
Yeah, small caps definitely trying. You know, you mentioned the S&P on its 7th straight monthly rally. In the 18 other times that's happened since 1929, everyone, stocks jumped 10.2% on average 12 months out. So this is where the technicians are going to be coming in. This is where we're going to look at historical trends. If we can get an indication, Taylor, when it comes to what comes next for the equity trade and the rest of the financial markets.
You know, it's really interesting. We've been sort of watching a bond story play out all day, bonds catching a bit, and then the reflationary trade a little bit as bonds go up. And that really is the story here with insurance and real estate. For the radio audience, some of the best sector performers on the day. You're only up, though, about 0.4%. And then it gets a little defensive with media, food and staples, some of the food and beverage and the tobacco index up 0.2%. And then I sort of draw our attention down to the unwind of that reflationary trade with transportation and banks and energy firmly at the bottom. You're off anywhere of 0.5% now to 1.5%, Carol.
All right, Taylor, thank you so much for that. Let's get to some of the movers today. Tim is out, so I'm going to do some gainers and decliners. On the gainer side, certainly one that caught my attention is NetEase, tickers NTES. Stock is up about 8.7%. Chinese gaming stocks, after selling off yesterday on concerns about China's decision to limit the amount of time that Chinese kids can play online, well, we saw a bounce back in some of those names. NetEase among them, also Tencent and some others. Moderna also on the upside, up about 1.6%. A study showing its COVID-19 vaccine generated more than double the antibodies of a similar shot by Pfizer and BioNTech. Decliners, let's go through them. Among them, Zoom. We broke down their earnings yesterday, tanking today, down almost 17% after a tepid sales forecast. Some concerns about, as we get back to the office, whether or not Zoom will be used. Wells Fargo, we had some headlines crossing about midday today, down 5.6% at the close. There are concerns among regulators. They're not satisfied with the bank's progress in compensating victims and shoring up control. So now we're wondering, okay, what's next for Wells Fargo, Caroline?
Yeah, of course, the mood music with Wells Fargo just keeps on getting worse. I'm going to double down and have a little look across asset at the moment, guys. And let's start with commodities, because interesting picture there. Now, not on the screen is the likes of aluminium that is surging to a 10-year high as we see supply issues in China, and we also see the ongoing ongoing demand element coming for aluminium. But on the downside was WTI crude off by about a percentage point. Now we digest, of course, the ramifications of Storm Ida, of course, the hurricane there, and actually Louisiana getting back on track with supply sooner than expected. But it's the worst month for oil that we've seen since October. So on August, it's down by about 7.5% for oil. I'm looking at what happened in terms of FX markets. Well, the Kiwi actually led us higher. The dollar was down against most G10 currencies. Perhaps a little bit more, well, risk-on tone to the market was what people are saying in the FX market, at least. But we also want to go in what was really front and center when it comes to the bonds. Yields spiking higher. Greece up 10 basis points. Italy up 9 basis points. Why? Because 2 ECB board members coming out and saying, look, maybe it's our turn to start thinking about drawing back on that stimulus, that bond buying, Taylor.
Yeah, you certainly saw similar echoes here, at least in the morning, Caroline. Bonds were really catching a bid. That's price higher, yield lower. We rethink the reflation trade, and then, of course, yields migrate higher as the day progresses. So you're back up above a 130 on the 10-year, and you're back above a 190 on the 30-year, something that we didn't see this morning, as perhaps we figure out what a taper later this year potentially looks like for the markets. Carol, one thing we can say for the markets is some interesting data overnight from China, a slowing of that PMIs. We had Tom Orlick on really earlier. As we think about an exporter of inflation, you're starting to see some weakness in China.
Well, and aren't you guys all starting to wonder if we're going to see some divergence when it comes to a monetary policy, global monetary policy? We know from Jackson Hole that the U.S. is going to wait a little bit, but to hear those European regulators say maybe it's time to take our foot off the gas pedal. Meantime, China's economy, are we going to see Chinese regulators basically pump more money into their system because of concerns about slowing growth there?
Yeah, I mean, it's a good point. I mean, we talk about the comments that we had, of course, out of Robert Holtzman. There was an interview, I believe, overnight here that we had with the former governor of the Reserve Bank of India, and he kind of talked about this idea that the Fed may actually be behind the curve, that it may think that it has the ability to sort of stamp inflation once it does finally appear here. But when you do this sort of newfangled inflation targeting here, it sort of puts you a little bit behind once it starts to arrive, and you just wonder if the Fed can be nimble enough, and if other central banks start to move without the Fed, where does that leave them?
But again, as we spoke to Bill Dudley, of course, formerly of the Fed of New York, but now academic front and center and writer for Bloomberg Opinion yesterday, he's saying that the focus is jobs, of course. We all eye what's going to come up on Thursday, jobless claims, eye what comes up Wednesday, ADP, Friday, the non-farm payrolls, and that's kind of where the Fed has to be focusing right now. That's what's going to move the market.
Caroline, in the meantime, we are getting some earnings, of course, as we migrate forward. Taking a look at Crowdstrike, second quarter revenue coming in better than expected, $337.7 million. Estimates were $322.8 million. We pushed the story forward because third quarter revenue, I'm going to check the numbers here because our third quarter revenue numbers look pretty weak. Third quarter adjusted EPS looks right in the range of 8 to 10 cents. Estimates were 8.7 cents. So we'll come back to some of that forward guidance, Carol, on the revenue numbers. What we will say is the full year adjusted EPS as well, looking better than expected, 43 to 49 versus previous estimates of 35 to 41.
Right.
So we are getting a full year guidance that is raised now for 2022.
Watching that stock in the after hours, right now down about 3%, although tempering, it's moving up now. It's down to about 2.8%, bouncing around a little bit. Keep in mind, this is a stock that's been on a tear this year, up about 33%. So once again, we have high expectations going into an earnings reporting season for this one, and maybe that's why you're seeing a little bit of disappointment, down just shy of 3%, Caroline and Romaine, in the after hours.
Yeah, and I mean, I don't know if we can, I don't know if you have another comment here on CrowdStrike, but I wanted to pivot back to the jobs data here because I mean, this is obviously going to be a big driver here for Jay Powell. He made that clear here that it's the employment part of the equation that's going to drive monetary policy here. As in his words, the inflation part of that equation seems to have already been met here. But when you look at some of the estimates for where job growth is going to be, it's really all over the map. And no one really seems to know. And we've seen this sort of inability to sort of pin down a hard number on job growth really for the past couple of months.
But when it comes to how people feel about the jobs market, it was interesting that in that consumer sentiment data, yes, they're worried about data, they're worried about inflation, but actually jobs, That looks pretty bright spot in particular. They feel there is the opportunity, Carol, to go out there and get a role.
Right, and we've talked a lot about job openings that have been out there. What's interesting is, the conversation has shifted a little bit about whether or not we are going to see the employment levels that we saw back pre-pandemic. Maybe not everybody's going to come back to the workforce, and that's why some question whether or not Jay Powell and company should be focusing on labor the way that they are.
Yeah, Carol, that's interesting. We had a conversation about that with our guest earlier on surveillance. Some of the older workforce may not want to come back. How are you rethinking some of the traditional statistics that we usually talk about? Great conversation there.
All right, guys, that's going to do it for our cross-platform coverage of the markets on this Tuesday on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll catch you again tomorrow, same time, same place.